Space Exploration Technologies Corp., the largest IPO in history, meets its first public test. Report date July 19, 2026. Trading began June 12, 2026. Offer price $135.70. Gross proceeds approximately $85.7 billion. IPO valuation approximately $1.77 trillion. Class A shares offered 555.6 million. FY 2025 revenue $18.67 billion. FY 2025 adjusted EBITDA $6.58 billion. Last price as of July 19, 2026, approximately $124. Section 01, Executive Summary. Space Exploration Technologies Corp., NASDAQ, SPCX, operating under the brand SpaceX, is a Hawthorne, California founded, now headquartered at Starbase, Texas, space, satellite internet, and artificial intelligence company founded by Elon Musk in 2002. On June 12, 2026, SpaceX completed the largest initial public offering in history, raising approximately $85.7 billion, including the fully exercised over-allotment greenshoe option at a fixed price of $135.00 per Class A share, implying a valuation of roughly $1.77 trillion at pricing. This surpassed Saudi Aramco's 2019 offering as the largest IPO on record by proceeds raised. The company is best understood as three businesses bundled under one roof: a space segment covering launch services, Starship development, and NASA and government contracts, a connectivity segment covering the Starlink satellite internet constellation, and an artificial intelligence segment covering the recently merged xAI, developer of Grok, along with the Colossus data center infrastructure. The February 2026 merger with xAI, itself the product of an earlier merger with X Holdings, formerly Twitter, means investors buying SPCX are not purchasing a pure-play space or connectivity company, but a combined space infrastructure and AI compute conglomerate with sharply different unit economics across its three segments. Trading opened at $150, up 11% versus the offer price, and closed the first session at approximately $161, up 19%, giving SpaceX an initial trading day market capitalization north of $2 trillion. Shares continued climbing over the following days, reaching an all-time high of $225.64 on June 16, 2026. Since that peak, however, SPCX has fallen sharply. As of July 19, 2026, shares trade around $124, roughly 45% below the post-IPO high, and notably, below the $135 IPO offer price itself, a level the stock first breached in mid-July amid a Starship test flight scrub and a rapid buildup of short seller positioning. IPO key highlights. Shares offered base, 555,555,555 Class A shares. Over-allotment greenshoe, 83,333,333 additional shares, exercised in full. Offer price, $135 per share. Fixed price, not a marketed range. Total gross proceeds, approximately $85.7 billion. Base $75.0 billion, plus approximately $10.7 billion greenshoe. IPO valuation, approximately $1.75 to $1.77 trillion. Underwriting fee, approximately 0.7% of proceeds, approximately $500 million, unusually low for a mega IPO. Exchange, NASDAQ Global Select Market. Lead underwriters, Goldman Sachs, lead left, Morgan Stanley Stabilization Agent, plus Bank of America Securities, Citigroup, JP Morgan, Barclays, Deutsche Bank, RBC, UBS, and Wells Fargo. Controlling shareholder, Elon Musk with more than 82% voting control post-IPO via multi-class share structure. Financial snapshot for FY 2025 and Q1 2026. Consolidated. FY 2025 revenue, $18.67 billion. FY 2025 adjusted EBITDA, $6.58 billion. FY 2025 net loss, negative $4.9 billion. Q1 2026 operating loss, negative $1.94 billion. The SpaceX investment narrative is genuinely two-sided. On one hand, $18.67 billion of 2025 revenue, 33% growth year-over-year, a profitable and fast-growing Starlink franchise, a dominant global launch services position, and roughly $100 billion of post-IPO cash to fund its ambitions. On the other, a consolidated net loss of $4.9 billion in 2025, driven almost entirely by the AI segment's $6.36 billion operating loss. $29.1 billion of long-term debt as of March 2026, extreme reliance on Elon Musk's continued attention and reputation, and a stock price that has already fallen below its IPO offer level within 5 weeks of listing. Investors should weigh both narratives carefully. This report is not a recommendation to buy, sell, or hold SPCX shares. Section 2, Company Overview. Legal entity, Space Exploration Technologies Corp. Brand, SpaceX. Headquarters, Starbase, Texas. Relocated from Hawthorne, California. Exchange and ticker, NASDAQ Global Select Market, ticker SPCX. Year founded, 2002. Founder, CEO, and CTO, Elon Musk. President and COO, Gwynne Shotwell, the 11th employee, joined 2002. Chief Financial Officer, Brett Johnson, CFO since 2011. Employees, approximately 22,000. Reporting segments, Space, Connectivity, Starlink, and Artificial Intelligence, XAI. Controlling shareholder, Elon Musk with more than 82% voting control, approximately 42% of shares outstanding, locked up until June 2027. Mission. SpaceX describes its long-term mission as enabling human life to become multiplanetary, historically centered on reusable rockets, and more recently, on Starship as the vehicle intended to support that goal. The company's near-term commercial reality, however, is increasingly defined by two other businesses, Starlink, its satellite internet constellation, and since February 2026, XAI, its artificial intelligence subsidiary. Corporate milestones. 2002, founded by Elon Musk in Hawthorne, California. March 2025, XAI acquires X Holdings Corp., formerly Twitter, in an entities under common control transaction. February 2, 2026, SpaceX acquires XAI Holdings Corp. In the XAI merger, bundling space infrastructure with artificial intelligence capabilities under a single corporate umbrella. April 2026, confidential draft registration statement submitted to the SEC under the Jobs Act. May 20, 2026, Form S-1 registration statement filed publicly with the SEC, disclosing financials for the first time. June 1 to 3, 2026, Form S-1A amendments filed, fixed IPO price of $135 set, 5-for-1 stock split affected. June 5, 2026, Investor Roadshow begins. June 11, 2026, IPO formally priced at $135 per share. June 12, 2026, trading begins on NASDAQ under ticker SPCX. First trade at 11:50 a.m. Eastern Time, opening at $150. June 15, 2026, underwriters exercise the greenshoe over-allotment option in full, lifting total proceeds to approximately $85.7 billion. June 16, 2026, shares reach post-IPO all-time high of $225.64. July 15 to 16, 2026, shares fall below the $135 IPO offer price for the first time, coinciding with a scrubbed Starship Flight 13 test. Late July to August 2026, first earnings report as a public company, covering Q2 2026, also the trigger date for the first tranche of lockup releases, expected. Section 03, Business Segments. Space Segment. SpaceX's original business, reusable launch vehicles, Falcon 9 and Falcon Heavy, crewed and cargo missions for NASA under the Commercial Crew and Commercial Resupply programs. Government. And the next-generation Starship rocket system. The space segment generated approximately $4.0 billion of revenue in 2025, while the company invested roughly $3.0 billion of R&D spending into Starship development in the same year. Approximately $930 million in Q1 2026 alone. Starship's first orbital payload delivery is targeted for the second half of 2026, and is described in the S-1 as a key enabler for next-generation satellite deployment, launch cost reduction, and eventual orbital AI compute infrastructure. Connectivity segment, Starlink. Starlink, SpaceX's low Earth orbit satellite internet constellation, is the company's largest and most profitable segment. generating $11.39 billion of revenue in 2025, approximately 61% of consolidated revenue, and growing roughly 50% year over year. The segment reported 10.3 million subscribers at the end of Q1 2026 and delivered $3.26 billion of Q1 2026 revenue alone. Management has identified Starlink Mobile, direct-to-cell satellite connectivity, as a key growth vector, with the company estimating a combined Starlink total addressable market of approximately $1.6 trillion, split between roughly $870 billion for fixed broadband and $740 billion for mobile services. Artificial Intelligence segment, XAI, formed via the February 2026 merger with XAI Holdings Corp., developer of the Grok chatbot and the Colossus and Colossus II GPU data center clusters. The AI segment generated $3.2 billion of revenue in 2025, against a $6.36 billion operating loss, the single largest driver of SpaceX's consolidated net loss. Q1 2026 AI capital expenditure alone was $7.7 billion, implying a full-year run rate approaching $30 billion. A notable commercial development. In May 2026, Anthropic agreed to pay SpaceX approximately $1.25 billion per month through May 2029 for compute capacity across roughly 325,000 NVIDIA GPUs on the Colossus clusters, an annualized $15 billion contract, though either party may terminate on 90 days' notice after an initial 3-month period. SpaceX has separately announced plans to acquire AI coding startup Cursor for approximately $60 billion in stock. Segment revenue summary for FY 2025. Space, approximately $4.0 billion, profitable. Connectivity, Starlink, approximately $11.39 billion, approximately 61% of total, profitable with operating income up 120% year over year. Artificial Intelligence XAI, approximately $3.2 billion in revenue, but operating loss of approximately $6.36 billion, the largest driver of consolidated loss. Consolidated total, $18.674 billion. Section 04, IPO structure and process. Unlike most large IPOs, SpaceX did not market a price range and narrow it during the roadshow. Instead, following a series of testing the waters investor meetings, the company set a fixed $135 offer price ahead of the formal roadshow and held that price through pricing on June 11, 2026. The offering totaled 555,555,555 Class A shares, approximately $75.0 billion at the base size, with an additional 83,333,330 share over-allotment greenshoe option that underwriters exercised in full on June 15, 2026, lifting total gross proceeds to approximately $85.7 billion. Confidential draft filed April 2026 under the Jobs Act. Public S-1 filed May 20, 2026. S-1A Amendment Number 1, June 1, 2026. S-1A Amendment Number 2, June 3, 2026, with the fixed $135 price set. Roadshow began June 5, 2026, with institutional marketing across New York, Boston, San Francisco, London, Hong Kong, and Singapore. Pricing date, June 11, 2026. Trading debut, June 12, 2026, with the first trade at 11:50 a.m. Eastern Time after an extended opening auction process. Opening print, $150, up 11% versus offer. Day 1 close, approximately $161, up 19% versus offer. Retail allocation, approximately 30% of shares reserved for retail investors. Unusually large for a mega IPO. Access via Robinhood, Fidelity, Schwab, SoFi, and E-Trade. Underwriting fee, approximately 0.7% of proceeds, approximately $500 million, among the lowest percentage fees ever paid on a mega IPO. Underwriting syndicate. The offering was led by Goldman Sachs, lead left bookrunner, and Morgan Stanley, which also served as stabilization agent, together with Bank of America Securities, Citigroup, JP Morgan, Barclays, Deutsche Bank Securities, RBC Capital Markets, UBS Investment Bank, and Wells Fargo Securities as additional book-running managers. The syndicate also included co-managers such as Allen & Company, Cantor, Needham & Company, Raymond James, Societe Generale, Stifel, William Blair, BTG Pactual, ING, Macquarie Capital, Mirae Asset Securities, Mizuho, and Santander, roughly 23 underwriters in total. Use of proceeds. The S1's use of proceeds section lists expansion of AI compute infrastructure ahead of launch vehicle and satellite capacity spending, underscoring that notwithstanding SpaceX's space and connectivity heritage, the offering's stated capital priority is funding the AI segment's build-out. Section 05, Financial Highlights. All figures reflect the combined historical results of SpaceX. XAI Holdings Corp. Acquired effective February 2, 2026, and X Holdings Corp. Acquired by XAI, effective March 28, 2025, presented on a common control basis, and retroactively adjusted for the 2026 5-for-1 stock split. Consolidated revenue, $18,674 million in FY 2025, and $4,694 million in Q1 2026. Loss from operations, negative $2,589 million in FY 2025, and negative $1,943 million in Q1 2026. Net loss, approximately negative $4,900 million in FY 2025. Adjusted EBITDA, $6,584 million in FY 2025, and $1,127 million in Q1 2026. Total long-term debt as of March 31, 2026, $29,100 million. Segment revenue detail, Space, approximately $4.0 billion in FY 2025, profitable. Connectivity Starlink, approximately $11.39 billion, up approximately 50% year-over-year, profitable with operating income up 120% year-over-year. Artificial Intelligence XAI, approximately $3.2 billion, with an operating loss of approximately $6.36 billion, the largest driver of consolidated loss. Growth and capital intensity. Consolidated revenue grew 33% from FY 2024 to FY 2025. Q1 2026 revenue rose 15% year-over-year. AI segment capital expenditure was $7.7 billion in Q1 2026 alone, implying a roughly $30 billion annualized run rate. The company has burned through more than $37 billion cumulatively since founding, reflecting the capital intensity of reusable rocket development, satellite manufacturing, and AI data center construction. Total long-term debt stood at $29.1 billion as of March 31, 2026, before the IPO raise. Post-IPO cash, combined with existing balances, is commonly cited at more than $100 billion. Total addressable market per company estimate. SpaceX's S1 estimates a combined total addressable market of $28.5 trillion, described as the largest actionable total addressable market in human history. Notably, $22.7 trillion of that figure is attributed to AI and enterprise applications, a market in which SpaceX via XAI is a comparatively recent and unproven entrant, relative to established AI infrastructure competitors. Section 06, Management Team. Elon Musk, Founder, Chief Executive Officer, and Chief Technology Officer, founded SpaceX in 2002, and remains, per the company's own public description, not just CEO but its chief designer, lead systems engineer, and singular decision-making authority on major technical and strategic direction. Musk also serves as CEO of Tesla and holds leadership roles at Neuralink, The Boring Company, and X, formerly Twitter, raising divided attention considerations discussed further in Section 10. Following the IPO, Musk retains voting control in excess of 82% through SpaceX's multi-class share structure. His approximately 42% of shares outstanding economic stake remains locked up until June 2027. Gwynne Shotwell, President and Chief Operating Officer, SpaceX's 11th employee, recruited by Musk in 2002 from spacecraft developer Microcosm. Named President in 2008 after securing a pivotal early NASA contract, Shotwell today oversees SpaceX's roughly 22,000-person workforce and manages the company's customer, government, and strategic relationships, and sits on the board of directors. Colleagues describe her as the operational counterweight to Musk's vision-setting role. Shotwell rang the NASDAQ opening bell at SpaceX's June 12, 2026 debut. Her stake was reported to be worth approximately $2 billion at the close of the first trading day. Brett Johnson, Chief Financial Officer. SpaceX's sole CFO since 2011, when Musk recruited him with the explicit long-term goal of eventually taking the company public. Previously spent nearly a decade in senior finance roles at Broadcom before serving as CFO of networking chip firm Mindspeed Technologies. Following the xAI merger, Johnson also assumed financial operations responsibility for xAI. David Harris, Acting General Counsel, oversees SpaceX's legal affairs including regulatory matters spanning FAA launch licensing, FCC spectrum approvals for Starlink, and the company's expanding portfolio of government and defense contracts. SpaceX's multi-class share structure concentrates voting control overwhelmingly with Musk, who retains more than 82% of voting power post-IPO, despite public shareholders owning the economic majority of newly issued Class A shares. Public investors should recognize that this structure affords minimal minority shareholder influence over major corporate decisions, board composition, or executive compensation, a governance profile broadly similar to Tesla's under Musk, though with an even more concentrated voting arrangement. Section 07, Ownership, Float, and Lockup Schedule. A defining feature of the SpaceX IPO is how little of the company actually became freely tradable at listing. The initial public float represented only approximately 5% of SpaceX's roughly 13 billion shares outstanding, per KeyBank Capital Markets estimates, leaving the vast majority of stocks subject to lockup restrictions in the months following the debut. Pre-IPO venture investors named in filings include Founders Fund, Draper Fisher Jurvetson, D1 Capital, Fidelity, Thrive Capital, GV, Rothenberg Ventures, Valor Equity Partners, Sequoia Capital, Bailey Gifford, GigaFund, Andreessen Horowitz, ARK Ventures, and thousands of individual and employee shareholders, often held through special purpose vehicles. Lockup milestones. Standard 180-day lockup. Expires December 8, 2026 for remaining non-Musk, non-extended investor shares. First cliff for current employees. Up to 20% of eligible shares releasable after Q2 2026 earnings, expected late July to August 2026. Performance-based early release. Up to an additional 10% releasable early, only if shares traded 30% or more above the $135 IPO price on 5 of 10 consecutive trading days before the first earnings release, a threshold that had not been met as of this report's publication, given the stock's decline below the IPO price in mid-July. Staggered time-based releases. Up to approximately 7% additional shares at each of 5 post-IPO windows at days 70, 90, 105, 120, and 135. Final early release. Up to 28% more shares releasable after the Q3 2026 earnings call, expected October to December 2026. Musk lockup, approximately 6.4 billion shares, approximately 42% of shares outstanding, locked until June 12, 2027. Free float projection. Free float projected to rise from approximately 5% at IPO to approximately 40% of total shares outstanding by December 2026. This staged unlock schedule means that the first major test of secondary market supply and demand is likely to coincide directly with SpaceX's first quarterly earnings release as a public company. Section 08, Competitive Landscape. Because SpaceX now spans 3 distinct businesses, it faces different competitors in each segment. Launch and space competitors. Blue Origin, United Launch Alliance, Rocket Lab, China's state launch providers, and Arianespace. Satellite connectivity competitors. Amazon's Project Kuiper, OneWeb Eutelsat, and traditional telecom and broadband incumbents such as Verizon, AT&T, and T-Mobile, which SpaceX's satellite-to-phone push has notably pushed into a rare joint venture. Artificial intelligence competitors. OpenAI, Google DeepMind and Gemini, Anthropic, also a major SpaceX AI compute customer, and Meta AI, all are substantially more established in enterprise and consumer AI than xAI and Grok. Competitive positioning. SpaceX's space and connectivity segments hold clear, defensible leadership positions. The company is the dominant global launch provider by cadence and cost, and Starlink is the largest operational low Earth orbit broadband constellation. The AI segment is a different story. xAI is a comparatively late entrant competing against far better resourced and more established AI labs, and its current profile of meaningful revenue growth alongside very large operating losses is typical of an early-stage AI infrastructure business rather than a mature, defensible franchise. Analysts note that SpaceX's edge in AI, if it emerges, is more likely to come from its unique access to power, land, and eventually orbital compute infrastructure than from model capability alone. Strategic customer relationships. SpaceX's AI segment has also become a significant vendor to some of the same AI labs it nominally competes with. Anthropic's approximately $1.25 billion per month multi-year compute agreement illustrates how Colossus infrastructure capacity can generate substantial contracted revenue even from competitors, somewhat blurring the traditional competitor-customer distinction in the AI infrastructure market. Section 09. How the IPO went. Post-listing performance. SpaceX's debut itself was an unambiguous success by traditional IPO metrics. The offering was heavily oversubscribed, priced at the top of its fixed expectations, opened up 11% and closed up 19% on day one, and the underwriting syndicate exercised its full green shoe option within days. SpaceX staff reportedly wore green shoes on the NASDAQ trading floor in a nod to the green shoe exercise, and Musk celebrated the debut publicly on X. Key price milestones. IPO offer price, $135 on June 11, 2026. Day 1 open, $150, up 11%. Day 1 close, approximately $161, up 19%. All-time high, $225.64 on June 16, 2026, up 67% versus offer. First close below IPO price, mid-July 2026, approximately 5 weeks post-IPO. Recent trading level, approximately $124 as of July 19, 2026, down 45% from the all-time high and below the $135 offer price. 52-week range as of report date, $122.12 to $225.64. The subsequent reversal has been steep and rapid. Shares fell roughly 20% during July alone, and on July 15 to 16, 2026, closed below the $135 IPO price for the first time. The decline coincided with the scrubbed 13th Starship test flight, an automatic launch abort triggered by Raptor engine ignition failures on the Super Heavy booster, and with broader market anxiety about the sustainability of AI infrastructure capital spending across the technology sector. Short interest buildup. Short interest in SPCX rose from an estimated 40 million shares, 5 to 7% of public float, in late June to approximately 185 million shares, roughly 29% of the tradable float, and about $25 billion in bearish notional positioning by mid-July 2026. According to S3 Partners data cited by CNBC. Some analysts describe SPCX as Wall Street's most heavily shorted new stock. The elevated short interest reflects both genuine bearish conviction on valuation and AI segment losses and mechanical positioning ahead of the looming lock-up-unlock wave. Despite the sharp pullback, sell-side sentiment has remained predominantly bullish. As of mid to late July 2026, 27 of 31 covering analysts rate SPCX a buy or strong buy, with an average 12-month price target near $240, a range spanning roughly $62 to $800, depending on the analyst's AI segment assumptions, implying substantial disagreement about how to value the AI business specifically. As of this report's publication on July 19, 2026, SpaceX has not yet reported its first quarterly results as a public company. That release, expected in late July or early August 2026 and covering the second quarter, is widely viewed as the next major catalyst for the stock. Section 10. Risk Factors. Risk 1. AI segment losses dominate consolidated results. The XAI segment posted a $6.36 billion operating loss in 2025, against $3.2 billion of revenue, the single largest driver of SpaceX's consolidated net loss. Continued heavy AI capital spending at a roughly $30 billion annualized run rate without commensurate revenue growth could pressure the balance sheet and prolong consolidated unprofitability. Risk 2. Extreme valuation relative to revenue. Even after its post-IPO decline, SPCX trades at a substantial multiple of expected revenue. One sell-side estimate cited approximately 49 times expected revenue at recent prices, leaving little room for execution missteps and exposing the stock to sharp re-ratings on sentiment shifts around AI infrastructure spending broadly. Risk 3. Key person and divided attention risk. Musk simultaneously leads Tesla, XAI and SpaceX, Neuralink, The Boring Company, and X. Any reduction in his attention, health issues, reputational controversy, or departure would represent a material risk to SpaceX's execution and public market perception. Risk 4. Concentrated governance and minimal minority shareholder control. Musk's more than 82% voting control via the multi-class share structure means public shareholders have limited ability to influence board composition, executive compensation, related party transactions, or major strategic decisions. Risk 5. Execution and technical risk in Starship development. The scrubbed 13th Starship test flight in July 2026 illustrates ongoing technical risk in the vehicle central to SpaceX's next-generation satellite deployment, cost reduction, and orbital AI compute ambitions. Continued delays or failures could push back multiple growth initiatives simultaneously. Risk 6. Lockup expiration and supply overhang. With only approximately 5% of shares freely tradable at IPO, staged unlocks beginning around the Q2 2026 earnings release and continuing through 2027, with Musk's approximately 42% stake unlocking in June 2027, represent a substantial pipeline of potential future selling pressure, particularly if the stock remains below the IPO price when early tranches unlock. Risk 7. Elevated short interest and volatility. Short interest near 29% of tradable float creates the potential for sharp moves in either direction. Rapid declines if bearish theses are validated, or short covering-driven spikes if a positive catalyst materializes. Risk 8. Leverage. Total long-term debt of $29.1 billion as of March 31, 2026, adds financial leverage to an already capital-intensive, loss-making consolidated business, even accounting for the post-IPO cash cushion. Risk 9. Regulatory, geopolitical, and government contract dependence. Significant portions of SpaceX's space segment revenue depend on NASA and U.S. national security contracts. Starlink depends on ongoing FCC spectrum and foreign regulatory approvals, and both Musk's public political engagement and SpaceX's provision and occasional restriction of Starlink service in conflict zones such as Ukraine have drawn government and media scrutiny that could affect future contracting or regulatory treatment. Risk 10. Limited public company track record. As a newly public company with no prior quarterly earnings history, SpaceX's first several reporting periods carry outsized importance for establishing credibility with public market analysts and could produce significant share price volatility as investors calibrate expectations against actual disclosed results. Section 11. Post-IPO growth catalysts. Catalyst 1. SpaceX's Q2 2026 earnings release, expected late July or early August 2026, is the single most anticipated near-term event for the stock. The first opportunity for public market analysts to evaluate segment trends, AI CapEx trajectory, and management commentary directly, and a potential trigger for either a relief rally or further derating depending on results. Catalyst 2. Starship commercialization. A successful orbital test flight and progress toward the targeted second half 2026 first orbital payload delivery would materially de-risk the space segment's growth roadmap and the broader orbital AI compute thesis underlying part of SpaceX's valuation. Catalyst 3. Starlink subscriber and mobile growth. Continued Starlink subscriber growth, 10.3 million at Q1 2026, and expansion of Starlink mobile direct-to-cell service against the company-estimated $1.6 trillion combined Starlink TAM represent the clearest, most proven growth vector in the business. Catalyst 4. AI compute contract monetization. Large multi-year compute agreements such as the Anthropic contract at approximately $15 billion annualized could substantially improve the AI segment's revenue trajectory and margin profile if similar deals are signed with other AI labs, partially offsetting the segment's heavy capital spending. Catalyst 5. Analyst re-rating potential. With 27 of 31 analysts rating the stock buy or strong buy and an average price target of approximately $240, nearly double the current trading level, continued execution could support a meaningful re-rating, though the wide dispersion of price targets from $62 to $800 reflects genuine uncertainty about how to value the AI segment. Catalyst 6. Government and defense contract expansion. Reported negotiations around additional U.S. Government computing capacity contracts, alongside SpaceX's existing NASA and national security launch relationships, could provide incremental, relatively de-risked revenue streams across both the space and AI segments. Catalyst 7. Substantial post-IPO cash position. With more than $100 billion in cash following the IPO raise, SpaceX has significant flexibility to fund its Starship, Starlink, and AI ambitions without near-term external financing risk, a meaningfully different position than most loss-making, newly public companies. Catalyst 8. Potential short covering rally. Given short interest near 29% afloat, any sufficiently positive catalyst, an earnings beat, or a successful Starship flight, could trigger rapid short covering and an outsized upward price move, independent of any change in long-term fundamentals. Section 12. Conclusion and investment considerations. SpaceX's IPO was, by almost any traditional measure, an unambiguous success, the largest offering in history, at approximately $85.7 billion, priced at a fixed level that held through a heavily oversubscribed roadshow, followed by a 19% first-day gain and a further rally to an all-time high of $225.64 within days of listing. Yet the 5 weeks since have told a more complicated story, a roughly 45% decline from that peak, a break below the $135 IPO price itself, a sharp buildup in short interest to nearly a third of the tradable float, and a Starship test flight scrub that reinforced execution risk concerns just as the market began scrutinizing AI infrastructure spending more broadly across the technology sector. The core investment tension is straightforward to state, if not to resolve. SpaceX's space and connectivity segments are genuinely profitable, category-leading businesses with clear multi-year growth runways, while its AI segment, XAI, is an early-stage, heavily loss-making business competing against far more established players, and it is the AI segment that both dominates the company's consolidated losses and, according to the S1's own $28.5 trillion TAM estimate, represents the majority of management's long-term valuation case. Whether investors should value SPCX primarily as a space and connectivity company with an AI call option or as an AI infrastructure company with a profitable space and connectivity subsidy is likely to remain the central debate among analysts through at least the company's first several quarters as a public company. SpaceX's first earnings report as a public company, expected in late July or early August 2026, will be a pivotal near-term event, both for what it reveals about underlying segment trends and because it directly triggers the first major tranche of lockup share releases. Readers and viewers should be encouraged to review the complete Form S1 and S1A filings on SEC EDGAR, particularly the full risk factors, segment-level financial statements, related party disclosures concerning the XAI and X Holdings mergers and lockup schedule before drawing investment conclusions. Starship achieves reliable orbital commercialization. Starlink subscriber and mobile revenue growth continues at or above recent rates. AI compute contracts of the Anthropic style scale faster than AI capex, narrowing segment losses. The Q2 earnings report reassures the market on trajectory. Short covering and analyst upgrades drive a re-rating back toward consensus price targets near $240. Bear case. AI segment losses widen faster than compute contract revenue can offset. Starship delays persist. The Q2 earnings report disappoints, just as the first major lockup tranche unlocks, compounding selling pressure. Broader AI infrastructure spending skepticism across the technology sector continues to weigh on high multiple names. SPCX extends its decline meaningfully below the $135 IPO price. Bottom line, SpaceX represents a genuinely unusual public market instrument, a profitable category-defining space and satellite internet business bundled with an unprofitable, early-stage AI infrastructure business, all controlled by a single individual with divided attention across multiple other public and private ventures. The stock's rapid round trip from all-time high to below its IPO price within 5 weeks illustrates how sharply sentiment can swing even for the largest, most anticipated listing in market history. This report does not constitute a recommendation to buy, sell, or hold SPCX shares.